Good morning, Trade Pros. Welcome to our morning market update for Thursday, August the 2nd. It's August already. What a better way to begin the month than with a screw in your tire? Not a metaphor. I picked up a screw in my tire this morning on the drive over. Going to be fun. Um, yeah, this morning's market update, markets are selling off. We're seeing a lot of bearish pressure. There's a lot of things we're going to talk about. Actually, not that many, but we're going to go in depth on a few of them. We're going to talk about the reason as to why stocks dropped. We're going to talk about Bank of England's most recent monetary policy report and what it's done for the pound. And Tesla's up 9% after missing some results. And I'm going to ask you, how much money can you guys spend in one day? I want you guys to get that in the comment section. How much money could you spend and go through in one single day? But you got to promise you could do it every single day. And then we'll tie that to Tesla at the end. All right, let's get started. Today's morning market update. Wait, before we go, Victoria, how much money do you think you could spend a day for the rest of your life? Yeah. Well, give me a number.
Let's say like 3,000.
Really? What about you, Marky? How much money?
I have a wife, so
Mark said he's got a wife, 50,000. You guys are hilarious. All right, let's get the passport out. Let's go across a tour across the world. In Asia, Japan's down 1%. Hong Kong's down 2.2%. China down 2%. India down 1%. All Asian markets slaughtered this past session. And if you look at that and you say, I wonder if it has to do something with trade wars, the answer is yes. In Europe, at midday, London's down 1.3%, Paris down 0.8%, Frankfurt down 1.8%. Green across the board in European equities as well. Quite a bit of a sell-off overnight. Honestly, the markets, S&P 500 has taken a significant leg lower and broken some technical support levels. And I do believe that's going to lead to more selling in today's open. So we're going to look to short rallies right off the get-go, looking at price action, looking at the developments that we're going to talk about. I think the opportunity to sell rallies in today's market open. All right, in oil and in equities. Looking at futures here in the United States, Dow's down 0.7, S&P's down 0.6, and NASDAQ down 0.7%. So pretty right across the board there. Crude oil is almost down 1%, down 0.8%. And let's see what the pit open is. Let me just minimize this very quickly. Just curious to see how the pit session opens. We're down to 67.35. So this thing, actually, we rallied a little bit, rather. We rallied a little bit off the pit open. But crude still looks like a bearish trend. Look to sell rallies in crude as well. Gold's down 0.2%. Bitcoin's down 0.2 as well, hanging around the mid 7,000s where it's kind of found some support and it's comfortable sitting down there. This morning we have factory orders at 10 a.m. At 10:30 we have natural gas inventory, and at 4:30 p.m. we have the money supply and Fed balance sheets coming out. So we don't really have massive news left for the day, but I do believe natural gas is going to be a mover in the energy market. I know it's going to be a mover in the energy market. So look for that as an opportunity as well. We'll definitely be trading this in our trading room, either with crude oil or maybe the natty gas futures. So there's going to be a lot of opportunity today as well. All right. Down day across the board for stocks. This is on the back of some commentary from U.S. Trade Representative Robert Lighthizer, Robbie L. And he said this in the statement: the increase in the possible rate to 25% on $200 billion of Chinese goods is intended to provide the administration with additional options to encourage China to change its harmful policies and behavior and adopt policies that will lead to fairer markets and prosperity for all of our citizens. A very nice, beautiful political statement. All that means is we want to pressure China more to come to the table for negotiations. And rather than looking for a solution, they're just going to bump the tariffs higher and higher and higher until one side folds or a full-out trade war happens. One of the two will happen. So it's an aggressive negotiation tactic, and the market doesn't seem to like it this morning. It's selling off. Institutional traders are lightening their portfolios because uncertainty is increasing. When uncertainty increases, you got to decrease some of your position size and take hedging measures. So this week, I wouldn't be surprised to end the week today on a bearish note, and it could accelerate through the Friday as well. So we're looking for some bearish price action here in the open. Bank of England had their monetary policy report, and they voted 9-0 to hike rates by 25 basis points to 0.75% from 0.5%. So a unanimous rate hike. And this should be bullish for the currency, right? Well, no, wrong. And here's why: because this was already expected. The Bank of England hiking rates was an expectation that didn't surprise any trader who does this somewhat professionally to professionally. So that the fact that it was already baked in the expectation, the buying had already happened in the pound. Initially, when the news came out at 7 a.m., we had a little bit of a peak to the upside, took out some of the buy stops, and then a sharp drop, and we continued to hammer price action, and it's still further to the downside than when the report came out. So why is it bearish? Here's why. Some of the notes from Mark Carney, who used to be the Bank of Canada governor, our Canadian friend who went over to Bank of England, the land of the Queen, said a few things. Here's what he said. He said UK is seeing a buildup of domestic inflation pressure, and that's actually hawkish, meaning more interest rate hikes should be bullish for the pound. Here's the comments that caught everybody off guard. He said some Brexit outcomes would warrant a rate, hold for it, a rate cut. So he basically said in some form, he didn't stipulate what it would be, but he said some scenarios of a Brexit will lead to the Bank of England having to cut rates. And, you know, if you imagine an economy leaving a zone, a trade zone, really the Eurozone region, as they leave, they're going to have to put new trade practices together. And the first 1 to 3 years is going to be very volatile for that environment as they stabilize in their new system. And to accommodate that, what Mark Carney's saying is he might cut rates to provide the economy some support. That caught the market off guard. Nobody was expecting that. And even though it might be a small percentage, it might be a remote possibility, it wasn't priced in. And so that pressure led to more selling than the up pressure of a rate hike for the currency. That's why the pound's down. I think there's some opportunity in the pound for sure. US dollar pound pair will be volatile for the rest of the day. We might even do some futures trades on it. The big news is over, however, and so is the conference. The release was at 7 a.m. The conference happened at 7:30. All right, so that's what you have to know. That's why the pound's got some downside pressure. Mark Carney said a few other things. I'll read a few more notes out for you. Economy to move to excess demand by late 2019. If Brexit has disinflationary impact, Bank of England will react, which means what the inflation drops. It's not deflation, it's disinflation until you get to a negative number. All right. Banks have capital to lend through a disorderly Brexit. And he also said Brexit will have an impact on monetary policy, etc. So he's tied his horse basically to this whole Brexit outcome, and that puts pressure on Theresa May. And we're going to see what that actually looks like. We don't know. Nobody knows. And Donald Trump told Theresa May what he would do, and the advice is now, it was secret before, but I think Theresa May or somebody might have leaked it. It was probably Theresa because her last name is May. She may have leaked it. And what that advice was, you should sue the European Union to get out of it. That's huge. That's unprecedented. So anywho, point I'm trying to make is there's definitely volatility around that, and that's why the pound's down. Equity markets are looking very weak this morning. Here's one stock that is actually green on a large scale, up 9%, Tesla. All right, and I'm going to tie it back to asking you guys a question: how much money can you spend in a day? Victorio, who just left, said he would only spend $3,000 a day. I'm like, brother, man, we got to go out there and live life a little bit more. We could spend $3,000 a day, no problem, every day for the rest of our lives. Mark said that probably the smartest thing. There's a newly married man I appreciate it the most. Said, "I got a wife, bro. 50K." That was probably the quote of the day. But anyways, point I'm making is Tesla's blowing through $8 million a day in cash. They're just burning cash like it's a bonfire in Newfoundland. They're burning through it very quickly, and that's kind of the issue. However, the earnings that Tesla came out with were less worse than expected. And that's why they were rewarded with a rally. So it's kind of like your mom saying, "Oh, I don't think he's going to do anything with his life," and you managed to get a job at Walmart. That's the equivalent of what happened here with Tesla. They had their biggest loss in history at $717 million in a quarter, burning through $8 million a day. And Elon Musk apologized multiple times on the post-earnings calls for his erratic and sporadic tweet behavior, and he said he would tone it down. So he did take some responsibility for it. The Model 3 rush to deliver those vehicles caused some excitement. So Tesla's in an interesting state here. Nice rally, 9% to the upside. I believe today we're going to get a lot of short squeeze on Tesla. We could juice this a little bit higher to squeeze out some shorts. And then once the short sellers get out, What are the short sellers? Buyers. Once the buyers buy Tesla and rally it up to get out of their shorts, there's no more buyers. I don't imagine people are going to be buying Tesla at all-time highs, or not all-time highs, but at this inflated price, down we go. All right, so let me sum it up really quickly, because we've gone to a lot of different topics today. Equity markets are weak on the back of this U.S. and China escalation or re-escalation, and Robert's statement saying that they're trying to pressure China into negotiation through increasing tariffs. And Asian markets got obliterated, down a lot. Over 2% in one day is a big drop. You have 50 days like that in a row and you have zero. Well, actually, that's not true. If you understand mathematics, that's a false statement. It's still a significant decline. Also, because these markets are weak, we're going to look to sell rallies in today's session. We're going to manage our risk, and we're going to see what we get out of it. There is a possibility that we rally first, and then when we do rally, if it's on low volume, that's when you get a chance to sell it, day traders. I look to the downside. I think there's a lot of money trying to get out. All right, so I'll see you guys in tomorrow's morning market update. We close out the week, and tomorrow's a huge day. We have non-farm payrolls just creeping up at 8:30 in the morning, and we're going to trade that live with our elite team in the morning. I'll be in early. We're still going to do our morning market update. All right, see you tomorrow at 9 a.m. Manage your risk, trade like a trade pro. If you like this video, if you like these morning market updates, YouTube made a button, luckily. Please click it. We'd love to get your like. If you love it, we'll settle for a like. See you guys tomorrow. Goodbye. If you love it, we'll settle for a like. How do you guys like that? It's a quotable. Thank you, Marky. All right, trade pros, let's get down to business. I got some levels for you, and we're going to start the day on the short side. As I mentioned, I'll give you a nice level to look for on the short, and then we're going to go from there.